It's time for Overlook Stocks. Joining us now is George Tsilis, our senior markets correspondent. Now, we're looking at nLIGHT today. They had a huge rally after their earnings, up 27.75% on the day today, George. Can you tell us a little bit about their earnings and the company?
Yeah, this is a really interesting company, I suggest, in the context of the Trump administration, all the defense spending that's been going on, even allocations of all the big, beautiful bill fiscal stimulus that's coming down the road. And nLIGHT is essentially an industrial company. They make instruments that are tied to semiconductors and what are called high energy fiber lasers that are used in aerospace and defense applications primarily, but they also use them in industrial spaces as well. And some of the big clients that they denote in their company profile include BAE Systems, which is basically a European conglomerate of defense contractors, as well as Northrop Grumman, which is a major U.S. defense contractor that sells their products particularly or primarily to the Navy. So overall, this is a small cap company. It's about $1.2 billion in terms of market cap, but they did post some actually quite meaningful results for their Q2 earnings and sales. They actually posted a 6-cent adjusted profit. And this is actually meaningfully important considering the price action that we've actually seen, not just today, but since even last quarter, which I'll explain in a sec. But the estimate was actually a loss of 9 cents. So they bested that by 15 cents. And that compares again to the loss last year of 10 cents, even sequentially going to last quarter. It was a turnaround because last quarter they lost 4 cents. So sales also bested the estimate, came in at 61.7 million, up 22%, beating 55 million previous estimates. But at the same time, they actually increased it sequentially as well. And if you look at the constitution of the revenue breakdown, it was quite important because about 66% of their sales come from aerospace and defense spending. They highlighted essentially 25% sequential growth and 75% year-over-year growth in defense spending. And they also guided for 40% growth next quarter on a year-over-year basis as well. So it looks like the contracts that this company has secured for major defense names, alongside I think that's alongside the spending that's been going on in defense spending, and of course the fiscal stimulus we've seen has really benefited this small cap name. Which has a great intellectual property patents that are in high demand for industrial, of course, the aerospace and defense use. But with that said, I think the guidance is significant, and the profit adjusted profit this quarter is also significant. And some of the analysts also agree with that. If you consider that Needham, Raymond James, they actually increased their target to 28. And even if you look at Cantor, they increased their target to 27.50 based upon these results and the guidance the company provided.
I saw that too. Cantor's price target increase was a more than 96% increase from their previous price target. Yeah. So clearly they feel strongly about it. When I was reading through the report and then some of the other analyst commentary, I did see some concerns around their gross margin improvements from this quarter might not be as sustainable through Q3, particularly with their product gross margins. Did you see any flags there?
Well, I think that's a flag itself. I mean, if you look at gross margins on a trailing 12-month basis, excluding the report for Q2, it was only around 19%. So if you do see a significant jump like that, there are going to be some questions about the sustainability, just because that big jump might be based on a 1 or 2 quarter contract. So that's something you have to keep in mind, and that's why I think the analysts are raising their targets, but their targets are right around where we're seeing the price action settle out at or at equilibrium today. But I do think, again, the reason the stock has moved significantly in the last 6 months, up about 135%, and again, on a 1-year basis, about 138, most of the gains in the last year happened in the last 6 months. That's suggestive of individual single contracts, which may not be recurring. So that's important to consider. But even last quarter, if you look at the price action, there was a 3-year basing pattern that the stock broke out of and even broke above its 50-week moving average. So a lot of times when you see losses lessen, if you will, or get smaller, that signifies some of the best moves in growth stocks like this. And of course, there was a follow through this quarter where they came in with a surprise beat on an adjusted basis with the 6 cents versus the 9 cent expected loss.
Well, George, we appreciate you breaking that all down for us with nLIGHT up almost 28% on the back of their earnings there and with those 3 hefty price target increases. Thanks again, George. Tsilis.